Welcome to another episode of Sovereign Property Moves. Today we have Tharin Munasignhe from Legacy Finance. Tharin, welcome to the show.
Thank you for having me.
So we have so many things to discuss in terms of lending. Everyone is talking about the lending rates. I understand it's at a peak now.
Yep.
But what do you think about next 6 to 12 months outlook?
See, there has been talks saying that the rates would actually reduce.
Yeah.
But to be honest, there have been talks saying the rates would reduce since last year. So honestly, no one has any idea apart from the Reserve Bank of when the rates would reduce. But I'm hoping next year it should reduce. And as soon as the first rate reduction happens, the property prices should skyrocket. So now is a very good time for investors to move into the market.
Yeah, because the interest rates are at the peak, and
Exactly.
then even a lot
Exactly.
of developers, they are offering a lot of rebates and discounts.
Exactly.
Because the market is slow.
Exactly.
Yeah.
So yeah.
So when you're talking about local buyers, when they come to you for a lending requirement, basically what are the requirements, what are the parameters you're looking at the initial stage?
See, for a local buy, it's fairly simple than a foreigner. Like, we just need their payslips from their employer and ID documents and like what suburb they want to buy the property in, and it's pretty simple actually. So it's not as complex as the foreigners, and usually we can get an approval. We should be able to get an approval within 1 month, easy.
Right. So
yeah.
basically, you're looking at their pay slips, the borrowing capacity will
yes.
be based on their income.
Correct.
And what are the other things that affect the borrowing capacity?
So it's mainly income, but asset position matters at some times because the more assets you have, obviously the better.
Yeah.
And but it's mainly, of course, just the income, rental income, and Centrelink income, whatever. So
And then you pay that against their liabilities if they have, say, number of kids, the education costs.
yes,
And all
So-
those things matter.
yeah. So the more kids you have, of course, the less you can borrow.
Yeah.
But yeah, so it's mainly just about the income. The higher the income you go for, the more you can borrow. So yeah.
The credit score matters in that
Yes,
case?
credit score also matters, but anything above 550 to 600, 550 and above, we should be fine. But even if you have a lower credit score, we have many lenders that actually accept the people with lower credit scores. So the rate will be slightly higher, but then again, it gets the job done.
Right,
So yeah.
right. So when you're looking at owner-occupier loan and investor loan, what are the differences?
Yeah, with the main difference is the rate. See, own-occupied buyers get a better rate mostly.
And their LVR is higher?
Yeah, that matters as well. But it's mainly the rate. So own-occupied buyers will get a much better rate than investors. Not much better, slightly better that rate than investors. But investors will be able to go on interest-only repayments, which helps with the tax and stuff like that. And it will reduce their monthly mortgage repayments, which will improve their cash flow and stuff like that. And yeah, the other benefit is stamp duty at times. So for first home buyers, when it's your own occupied house, it's your first home, most likely you'll be able to get a stamp duty waive off.
Yeah.
So that's a added benefit if it's your first home and it's own occupied property. So yeah.
Right. So what do you think about the maximum percentage you can borrow? Say if you're going over 80%, there's lender's mortgage insurance.
Yes.
Is that a good thing to do if you don't have enough funding, or do you think that you wait until you get your 20% saved and go for a mortgage without LMI?
Right now, I suggest it's a good thing to do because properties are at a pretty low point, and whatever you pay in LMI, you'll actually make it up with the appreciation of the property. That's what I feel. But then again, it's entirely up to the client. So and for first home buyers, there's this new scheme called the First Home Guarantee Scheme, where you can put in a 5% deposit and pay 0 LMI, and like you get a very good rate as well. So it's a very attractive scheme that so many first home buyers are going for these days.
And then I understand there are certain professions that they don't have to pay LMI even if you go above 20%.
Yes. Yeah, like doctors, nurses, engineers, some engineers. And there's a few others. I need to look into it, but it's mainly doctors and nurses, accountants.
Okay.
Yeah, like registered accountants, like with
Right.
CPA and stuff like that.
Right.
So they should be able to get a loan without paying LMI.
Right.
Yeah.
And then is there a difference between getting a mortgage straight away a mortgage versus you package it up with your superannuation fund and get a funding option through your superannuation account?
Yes, that's called SMSF.
Yeah.
To do that, not the everyday individual can't do it.
Yeah.
Like your super has to be above, like I'd say 250k combined super, and you have to have a decent income. But the good part of that is they don't look at the bank doesn't look at your other liabilities. They just look at if your super and your income that comes from the super can service the loan. So,
And also the rental income of the property.
yes, the rental income as well. So they don't take into account any credit cards, other home loans or anything like that. It's just the super income and the rental income.
Superannuation
Yeah.
payments are regular
Yes.
payments, so
Exactly.
doesn't affect from your normal
Exactly.
liabilities.
That's a very attractive one these days. Yes.
Right. Now, when you're talking about lending for foreign investors,
Yep.
I know few years back, all the financial institutes, including major banks, they used to lend for foreigners, including Sri Lankans. And then a few years back, they completely stopped it, especially for Sri Lankans. And I think now they have considered Sri Lanka. They are looking at Sri Lankan income as an income source and then offering loans to a certain percentage. Can you just elaborate on that?
So basically, there are so many lenders that accept the foreign income.
Yeah.
The issue here was with the Sri Lankan economic downturn. What happened was they stopped taking the Sri Lankan rupee as a currency. So there were so many people that were left stranded without like being able to buy a house here because they couldn't get a mortgage.
Yeah.
But now, as of recently, I think around 2 months ago, there are two lenders that who have started to accept the Sri Lankan rupee income.
Is that because of the government change?
Possibly, who knows?
Yeah. So that's a good news for our Sri Lankan investors.
That's actually really, really, really good news. So
yeah. So these two institutes, they are major banks or financial institutes?
I'd say they are second to third tier lenders.
Right.
So the rate will be slightly higher than a major lender. Yeah. But
what is the normal rate?
The rate would be, I'd say it's roughly 7.99%.
Versus normal
lending is like 6.3, 6.2,
right,
roughly.
But this one will be a standard mortgage with 30-year.
Yeah, it will be
period.
A 30-year home loan.
Yeah.
And everything is just like a standard mortgage. It's just the rate increase.
Right.
And there'll be a 2.5% application fee, which will be added on to the home loan. So there's nothing to be paid up front.
Right.
But apart from that, it should be we should be able to get done.
What is the percentage we can borrow with this option?
Yeah, so we can borrow 75% of the property value if it's a house and land. But if it's an apartment in the inner city, you can borrow 60%.
Right.
So yeah.
Can you go with 2-part contract as well? Combined.
As in the land and construction?
Yes.
Yeah, of course.
Right.
Of course.
Right.
We can do land and construction. Yeah.
That's good.
Yeah.
Now, when you, especially for Sri Lankans,
Yep.
If a lot of our clients are keen on this option.
Yep.
So what are the exact documents, the information you require to go ahead with this option?
Yes. So we need to show pay slips for 3 months separately. And
in a Sri Lankan company, Sri Lankan income?
Yes, Sri Lankan rupee income for 3 months. Of course, if it's like a different currency, would be even better.
All right.
But Sri Lankan rupee income was fine, and 3 months of bank statements.
Right.
So all of this, if it's in Sinhalese, it needs to be translated by Nati.
All right. Okay.
And the main thing that the guy at the bank told me was you need to have a credit rating of A, which means it has to be like a really clean credit file.
So you're talking about the CRIB report in Sri Lanka?
Yes.
It should be very clean.
Yes, it has to be very clean and with no defaults or anything like that.
Right.
So yeah.
Right. And then say if a Sri Lankan is working in another country, running in different currency,
Even better.
Even better.
Even better.
Right.
So, yeah.
That's good. That's good. So Tharin, tell me certain situations where you faced, like, have you faced any loan rejections? You have submitted all the documents, everything is done, but for any reason that it got rejected. What are the reasons that we have to be aware when you're submitting a loan? I know, I mean, you take care of all those matters, but generally, what are the parameters you're looking at?
See, so far been in the industry for 3 years. Touch wood, I haven't got a rejection yet.
Wow, that's good.
But usually when we submit documents to the bank, they always send us missing information.
Right.
So they request for additional, like say if they're not satisfied with the pay slips that we have showed, they ask for additional pay slips. And sometimes certain clients, they sometimes leave the job without telling us.
Okay.
And sometimes they reduce their working hours. So that actually can result in a rejection of the loan, because then we are showing one thing to the bank, and then later on we are
It's a different, especially
else.
now with our properties. Sometimes clients are buying off the plan properties, so the property settlement could be in 2 years' time. So there's no point getting a pre-approval now.
No.
Because it is valid only for 3 months.
Pre-approval is valid for 3 months. Yes.
So ideally, you should lodge your application 3 months before the settlement, I guess.
3 months, 3 to 6 months before the settlement. So basically, we lodge the pre-approval, and then once we send the contracts in to the bank, and we get the loan approved, you can settle it within 6 months.
Right.
So won't be much an issue.
But I'm really excited about the Sri Lankan.
That's a really good option,
Sri
actually.
Lankan investors.
Yes.
Just when you compare this option,
Yep.
a foreigner buying an investment property in Australia,
Yep.
so we can organize funding through an Australian financial institute for
Yes.
that property. So when you do that process versus a local buying,
Yes.
let's say same property, what are the differences?
I'll actually tell you the differences of what we used to do all this time before the Sri Lankan income was actually accepted. We actually used to go to these private lenders that give us a 1 to 2 year loan term.
Yeah.
Okay, and that was very expensive. Like the rates were roughly around 12%.
Right.
Plus, on top of that, they charge a 2.5% application fee, which brings the rate to roughly 14.5%, and they need to settle it within 8 to 12 months. So this one, where we have a 30-year mortgage, that's one benefit, and the rate is 7.9 plus the 2.5%. But the rate is actually 7.99%, which is a really attractive option, I think.
And that's not a private lender.
It's not a private lender.
It's
a major financial institution. It's like a second-tier lender, which is really good.
One question now. Now, say you're showing a foreign income, Sri Lankan income.
Yep.
When they convert that to Australian dollar figure, is there any certain buffer they are keeping outside the normal percentages or the daily exchange rate?
So they take 80% of what they earn. So say you earn 100,000, they'll take 80,000 of that income for
as
servicing
your salary.
As your salary. And when we add that to our calculators, we'll get the borrowing capacity. And like before we lodge an application, we can always tell the client that this is your borrowing capacity, this is the price of the house you are able to go for, depending on your deposit. And then we can prepare everything and then lodge it to the bank.
And then you should, when you're looking at a local buyer, you look at their assets, what are the assets and liabilities they have. So similar way you look at a foreign investor as well.
Yes. See, assets don't matter much, but then again, we do look at it.
Right.
But of course. So basically with the liabilities, the bank actually looks at the credit cards or car loans in Sri Lanka and in Australia both.
Right.
So
and then those records will be reflected in the CRIB report.
Yes, so they'll do a credit report they'll request a credit report from Sri Lanka, and everything will be shown in that. So, and they were very strict with that. There cannot be a single missed repayment. If not, they're going to reject the loan. So,
Right. And then how long will that take, the entire process for a foreigner to get the finance?
it all should be done within 1 month.
Right.
Should be. I can't guarantee, of
Given
course.
that
It
you have
depends.
all the information.
It depends on how complex the scenario is, because every client is different, every loan is different.
Yeah.
So it depends on the scenario, but most likely 1 month is a safe time period. So. Yeah.
So thank you very much, Tharin.
Yep, of course.
We talked about lot of topics, lot of information.
Yeah, looking forward to work with you. Yeah.
Thank you very much. And then I'm really excited about the new opportunity for
Yep,
our
for the Sri
foreign
Lankans,
investors
yes.
to get the funding here. And also we are doing events in Sri Lanka, so we can present this
Good luck with
option
that.
to them. Anyway, thank you very much.
Yes, of
Thanks.
course.